have it?
Okay, perfect.
Yes, fantastic. So welcome everyone in this webinar. Welcome to all our members, friends of the Swiss Chinese Chamber of Commerce. We're happy to have you today with us for this 40 minutes with Greg Au-Yeung and of course our president Alexandre, who will host and moderate this session. Thank you very much to all our members who are contributing to the success of the Swiss Chinese Chamber of Commerce. This is thanks to you that we can organize such events and cover very diverse topics along the year, even though we are navigating in such a complex context right now, but we are very looking forward to welcoming you in physical events again, and we hope that it will be very, very soon. Also, I would like to thank all our sponsors, Gunvor, Air China, and China Mobile International. Without their support, also this kind of events would not be possible. If you don't know about the Swiss Chinese Chamber of Commerce, I will just give you a very short introduction about our activities. We organize such events. Also, we want our members to meet and do business together, share business opportunities between Switzerland and China. So in a normal context, we organize networking events. We have 650 members across Switzerland. So we have an office in Zurich to represent the Swiss-German part, and also in Lugano if you're heading in Ticino. Sometimes you can also find some great events there. And from Geneva, we are leading the Romandie chapter, and this leadership is covered by our president, Mr. Alexandre Gaillard, from November 2020. And we are very happy to have him today to moderate this session about Fintech. The floor is yours, Alexander.
Thank you very much, Philippe. And it's a pleasure to host with Greg this special webinar about Fintech. I remember 2 years ago, before the pandemic, I'm sure some of you were in Geneva attending the huge banking events and Fintech event we organized with Karim Daou. Hopefully we'll be able to organize the same whenever this is possible. And whenever this is possible, also, I would like to invite you to join the Swiss Chinese Chamber of Commerce to take the first flight back to Beijing and Shanghai, where we'll hope to organize a business trip with a business delegation from Romandie and also from Ticino and Zurich part of the chamber. Thank you very much, Greg, for being here. I know you're joining us from Jiangsu. That's amazing. Where are you now?
I'm actually in a city called Wuxi, 150 kilometers southwest of Shanghai currently.
Okay, so for those that actually don't know Jiangsu, Shanghai, so basically you're in the middle of the country, slightly on the west, between Suzhou and Hangzhou, that everyone should know.
Exactly. And it is, for some who don't know about what's going on in Wuxi, it's actually one of the prime locations for making car batteries and IoT, Internet of Things sensors. So a lot of the new electric vehicles actually have the manufacturing parts from Wuxi as well. So now you know.
Now we know. If we have an electric car, there's big chances that it's coming from you guys in this city, right? Well, thank you very much, Greg. It's a pleasure to have you today. I mean, you have a very important background that you will expose to us in terms of financial background, banking background, and now fintech background. I thought it was very interesting to have you explain us what's going on in China. As most of us, unfortunately, we cannot travel to Hong Kong or China without very, very extended and complex quarantine. It is interesting to see what happened during this pandemic. What is also going on with Chinese fintech expansion globally. We hear a lot about the digital wallets, digital yuan. That's a very interesting topics. but perhaps other topics also like peer-to-peer lending, which is very important in China, also might expand internationally. So I'm sure we're going to have a very interesting session in the next 30, 45 minutes. Please, dear listeners, if you have questions, it is important to add them. I think it's going to be a very interactive presentation. So you have a chat in this chat system, in this webinar system. Just write down all your questions, and Philip will prioritize them and then add them to our guest today, Greg. So with no further ado, Greg, again, it's a pleasure to have you from Jiangsu. The floor is yours. Invite us to this Chinese fintech journey.
Thank you very much. So let me try to share the screen first. So Alexander, can you see?
We see it, thank you.
Okay, thank you very much. Well, it's an honor to be here, honestly, even if it's virtually, and I take offer from Alexander at no time, flying to Geneva, and but it's good nevertheless in this forum, and I guess the Chinese fintech industry did not happen in a vacuum, and it has been driven by a lot of the historical development, market condition, the culture, and others, and while some of them are quite similar to the rest of the world, and some of them are quite unique. So today, what I'd like to do is to share this past and present, and hopefully explore the future with you guys. Okay, this, I'm not going to go into this. It's just my background, and you can look at later on. But one thing I would just like to promote is my YouTube channel, because I actually created a YouTube channel a couple of months ago. It's called Inspiring China, and it talks about the China fintech business and lifestyle as well. So if you're interested, if you like it, share and subscribe. Okay, so
just before,
yeah, go on.
Actually, that's a good point. I'm sure it will interest also
Sure.
our members. If we want to broadcast in China, we can use YouTube, or we should use some local tools?
Absolutely, you can use YouTube because it's international, and a lot of people, as you know, use VPN to bypass the Great China Firewall. So a lot of people, everyone do it. It's legal. I actually have an episode about VPN. It's not illegal to use VPN in China. A lot of people don't get that, and so that's why about 100 million people actually use VPN to access foreign websites, including YouTube.
I see.
Yep.
I see.
Yep. Okay. All right, so I'll just dive right in. The first thing you need to know about the fintech in China, you need to know about the regulatory landscape, which is very important. On the left-hand side of the slide, it is the number of licenses that you need in the traditional incumbents. That means banks, insurance company, trust, and brokers, and all microfinance. All of this you need license to operate, just like the rest of the world. All right. And what's new in China is that for the last 10 years, there's some new online licenses that have been issued by the government. That is what we call the online licenses on the right, and you can see on blue bucket. And that includes, for example, Alipay, third-party payment. We pay, this all classify under this third-party payment. And then you have the online lending, which I'll talk about later on, because this is replacing the P2P license in China. And then you have the digital banks. WeBank, for example, is probably one bank that is worth mentioning, because it's a huge bank now. After 2 years in operation, they already make profit. And today they make like $500 million US dollar per year. So that is quite a record, for just a bank, and they are actually the largest banking unicorn in the world. And then you have all the others, licenses, and all of this you need to apply, and then and the government will approve accordingly, of course, if you're qualified. And then the last piece is actually the fintech software providers on the green part on the far right-hand corner. This does not require any financial licenses, but of course you have to get a business license to operate. So if you're a software provider or you're setting up an R&D center, you don't need the financial license. All you do is to get the ordinary commercial or business license. Okay. And next slide is very interesting, because this is exactly what is today, and it may be a bit dated, the numbers and all this in the last 2 years. And this is the entire sort of fintech players overview under this license. That means the online license authorized by the government. And if you see the top half, it indicates the blue part, right? It tells you who's the regulator who approved this license, and also the total number of players in the market. So for example, third-party payment, they're about 237. It's dropped a bit. I think 36 licenses were revoked because they were not making money, or they were making losses, etc., or they're not running properly. So the government revoked the license after it expired. And then the other part is the online lending, which is the one is replacing a P2P license today. And as of today, it's about 262 already registered and running. And then you got a digital bank, which is about 4, insurance, all the rest of them on the right-hand side. And also the online consumer finance also is about 180 of them. These are the micro finance. That means, it's actually not lending, the dollar amount is tiny. Let's say if you want to buy a printer and you don't have enough money, you want to have it as an installment, you can go through this online consumer finance company, and then they will lend money to you, and then you have to pay them back on a monthly basis. So let's say 2 years, for example. Okay, so these are all the companies that run under this license. On the bottom half, it tells you just a sample company. Say, for example, third-party payment is Alipay. The capital is about 770 million. But bear in mind that this capital is not the minimum requirement, because when you set up, far less. The cost is far less. So it just, whenever you run your business, you have more, the bigger lending portfolio, you need to increase your capital, because just like banks, when they operate, the government ensure that you have enough money as a leverage, and also you have enough money in case something goes south. And that's why the capital requirement is extremely important. And then if you move on the right, online lending, one of the pioneer, I would say, online lending P2P is actually PPDI. And this is actually a company, which is quite substantial now. It's probably like the second, third biggest in China now. And then you move on to digital bank, which is WeBank, as I mentioned earlier, and then all the way to the right. So again, all of this is the capital varies, from company to company. And if you are more interested, there are actually a website that tells you exactly what are the requirements to apply for this license, and also what channel you have to go through, etc. And then, and this slide. Again, I think it's very important to understand where the fintech come from, the origin, what I call, because it actually it tells you a bit about how, what the strategy is. So, for example, I have classified into like 5 categories, from top down. The first category that fintech company that comes from originally would be the internet giants, like let's say what China calls the BATJ, Baidu, Alibaba, Tencent, and JD. These are the big internet giants, and they started about 20 years ago for social media business, for other internet-based e-commerce transactional businesses, and then now they evolve into fintech. And then the second category is financial IT, which is the financial software company. Mm-hmm. So a good example in here is Hang Seng on the far left. Hang Seng is actually the largest financial software provider here. They dominate the market in banking software, and also the securities trading software. They actually dominate the market. They captured a major market share, and it was acquired by Alibaba about 3-4 years ago. And the third type is a startup. Those are the pure startups. So those are the ones that set up probably less than 10 years ago, and they go straight into fintech. All right. And then the fourth one would be the finance. That means they could be coming from banks, and particularly because about 5-6 years ago, a lot of the banks started to set up their own fintech spin-offs. So what it means is that they set up an individual company, and that company will either service the banks, or they service other fintechs, or they work with other fintechs. So this is a very interesting scenario in China today. And also a direct bank function that is part of the banking group, that could become a fintech as well. And the others are categorized is actually could be retail companies. It could be, for example, SF Financial is actually a logistics company. It's the largest logistics company in the world, in China. And they basically provide delivery for all the parcels for all of the online purchases. And then you have the Haier, which is actually a home appliance firm. They produce fridge, TVs, and consumer appliances. So all these are different. But when I go further in, then you understand what what it means. Now, this is a very interesting slide because this tells you the history. It's a snapshot of the fintech in China. First, take a look at the left, because it's back in the 1980s, I think when China started the economic reform. Don't forget, before 78, there was a very closed society in China. They were very poor. Their GDPs match some of the African nations. They were super poor. They were very backward, and no technology whatsoever. And then it was during that time when they opened up the market. Then the government already identified that science and technology is one of the key factor to succeed in economy, and that's what the government started to modernize the country by spending more money in R&D, and also the university rejuvenate the faculties of computer science and mathematics, etc. So all this started around the early 80s. And then around the same time in the 80s, the banks started to service again, because there was only one or two banks in China before 78. And then in the 80s, they start to set up the new banks, the retail banks in all over China. And then also that's in the 80s. And then stock exchanges in the early 90s. And then mutual funds set up in the late 1990s. So all of this financial company actually emerged from that era. Around the same time in the 90s, because of the policy, favorable policy by the government, a lot of the IT companies start to emerge. Huawei, Lenovo, all these hardware firms, including ZTE, all this come around 1990s. And then around the same time, Tencent, Alibaba also were set up during that time as well. So all of these are what I call the stepping stone of the fintech in China today. Because if you look at come back to this map, because they went through all these exploration stage from 2004, when first, I think Alipay was probably the pioneer in fintech, because they are the first one that is actually using technology to solve a financial problem. And this is the first time that actually tech company was trying to get into this financial industry, and it was a very innocent, I would say, approach, because they only want to solve the online payment, for Taobao, which is the equivalent of eBay in China. And then in 2006, the Credit Ease actually brought P2P into China. And 2007, PPDai actually set up as well. And then around the same time in 2008, it's one of the first blockchain company. It's a controversial about the exact timing, but it's around 2008, 2009. The 33.cn actually was set up. This is one of the first blockchain, they claim, is a blockchain company in China. And then if you move on to right, is when the market emerges, there's a lot more fintech companies set up. Consumer lending company, excuse me, consumer finance company is actually and another type of license that the government allow for the players to come in. And then cloud computing, big data companies start to emerge. And then in about 2011, after about 7 years of trial and error, which the government allowed the Alipay and many other sort of third-party payment company operating without licenses, without proper financial licenses, they start to regulate. So I think it's a good move, because it was starting to grow really big. And then through the experiment, they find that this is actually going to help the economy. So all this is actually come to place. Excuse me. And then payment QR code is actually, China did not invent it. QR code is the Japanese who invented it, but Alipay was the one who actually revitalized this QR code and then use it in payment. And they also, at the same time, they actually experiment sonic payment and NFC and any others, but they found QR code probably most appropriate for China, and that's why they use that. So all of this, move on to right, there's a lot of rapid growth, and all this, P2P start to grow, and then all the fintech company start to grow. And it's probably, I would say around the 2015 or so, it start to adjust, because there's some small consolidation happening, because there's just so many of them. And even I think it was like 2018, there was about 220,000 AI company was set up in just 1 year. I mean, just crazy. I mean, I'm sure many of them are not really AI companies, right? And but at the same time, because it's just it's so easy to set up a company, and also it's flourishing, and that's why there's a lot of company willing to get the funding or from their own pocket to set up this company. And
that's why I would like to ask you, Greg, when
Sure.
you see the evolution of those companies, most of those companies are IT-driven companies, and it seems that later on they were more like with a purpose of servicing either lending or wealth. Can you perhaps explain, because we hear to what you said, that there was a lot of copycats, basically. And people try to copy what the neighbor would do and say, hey, I can do the same. But the market is not unlimited, right? So if I understand well, there was like some kind of rush in the 2013 to 2015, which eventually became some type of bubble, which adjusted later on. But what happened of all those entrepreneurs? Because I guess some of them are driven by Go-Yeung, by state enterprises, but others are driven by private investors, right? How this changed in the past 20 years?
I think, well, it was more like 10 years. I think it's particularly in the fintech industry. I think a lot of the, you're right. I mean, it's just crazy. I mean, with all this company already set up, and it is, a lot of them actually are from tech space. I think the banks actually did not take much note on that. Even when the emergence of Alipay start to capture the market, they still think that, Alipay is just a tech company. And that's why the bank actually, but don't forget, majority of the banks in China is state-owned. One way or the other, they are owned by the government. Mm-hmm. There are 4,600 plus banks in China. Only like less than 20 are really privately owned. And that's why the state-owned company just, like a civil servant, right? They're not afraid of going bankrupt because they're government backed. And that's why they actually did not take note about that. And that's why they first of all, the government allowed the technology company to continue to drive it. At the same time, the bank is not taking notice. But it wasn't until probably like 2014 or so, the government actually do step in and say, look, I mean, you guys have to take note. I mean, sooner or later, even though it's government backed, I mean, you guys are in deep trouble, because if you don't get into the space, then, there'll be tech company all over you guys and taking the deposit out of your bank, and then they're moving to P2P and moving to other space. And that's where the government actually advise or tell the banks and say, look, you guys need to look into the fintech. And they're right, because even in about 2014, they did not, as I know some of the people actually set up the fintech, they just say, yeah, it's for fun. It's more like just setting up because of government policy, right? But not until probably like 16, 17, they realized that this is something that you can actually create revenue, right? That's one thing. And the second thing is that because this fintech company is actually making a threat, is posing a threat to the banking industry, because a large chunk of quite substantial chunk of the deposit actually moving to P2P, the wealth space. And then, of course, that P2P actually goes under for a lot of them. And the bank run, or the company goes under, or the shareholder disappeared, and all this happened day to day, right? And that's why this is where the reshuffle goes through, because the government actually did note that they, even though they taking a very liberal approach, but they have to monitor it closely, because they already set up the association to talk to this P2P companies, right? And to make sure that, they know what's going on. And some people say that they stop it too late, and but it's arguable. But at the same time, what I want to say is that the government actually know that, and fintech, all this company, they are expanding very fast, but they are probably watching from a sideline until it goes under. But coming back to your other question, Alexander, I think a lot of the fintech, even though if they go under, right, they just switch to a different tech company, because I guess the beauty of the China landscape is that you don't need to go into fintech. You could just go to tech. You can make money. Social media, there are a lot of other areas that you can go into, even if you don't like Pinduoduo, as you know, right, is one of the e-commerce company in China, right? They just set up like 2 years, and then they went public already, and it's huge. It's bigger than Alibaba, right? It's bigger than the Taobao. So that's why there's a lot of opportunity for this entrepreneurs in the tech space. They can move around. They don't necessarily need to just go fintech, because especially the regulation getting tighter. And if they don't want to get burned, they said, there's too much trouble in the compliance space and I just want to get out. And then they move back to the tech space. And this is exactly what's happening now. A lot of companies actually starting to think about maybe it's not the right approach, because we make money already, but further down the road, it's going to be a stricter regulation, just like banks. So why do you want to go into that space? So why don't you just go back to technology and then just do it as not an operator? It could be just like software developer and providing the engine, AI engine for the banks. That also works. So that's why this is what's happening in this adjustment period. And then that's why I said, in this slide, the restart is also coming around because of a lot of the new laws coming out from China. Cybersecurity law, data security law, data privacy law, and data privacy and data security law is similar to the European GDPR, right? And so all this is actually coming to play. And then that will force a lot of the entrepreneurs have a second thought about, should I stick around in the fintech space, or should I go back to my beginning to technology, or I'll just step on the sideline and provide a software for the company rather than I actually run the business myself, right? So that's what happened.
It's good to hear. 2 years ago, I was kindly invited by Felix Mosner of the Swiss Next China, based in Shanghai, and we had a few sessions with different fintech companies. It was 2 years ago in Beijing, in Shanghai, and they were mocking our GDPR regulations. Saying like, hey guys, you're gonna take so much time, spending so much time around this GDPR and data protection. You're gonna lose momentum in AI. You're gonna lose. And what we see now is that two interesting trends. First is that in China, this confidentiality is taken very seriously, but we see also in the US. I'm sure you've seen the battle between Apple and Facebook with Zuckerberg, and Apple now looking into removing the advertisement pin that is actually connected to each of our cell phones, which would actually change a lot of the business in the net economy. So the evolution is actually moving quite fast. We see in China, and this is inspired by national regulations, or you see it more like an international evolution, meaning that China is doing its own thing with its own rule, or China is also looking into what other companies are doing internationally and trying to either adapt local companies to the international laws, or international companies wanting to go to China. Is this kind of exchange?
I think it's driven by both. I think, that there is a need to have this data privacy. I mean, it's always been a lot of the press and even the foreign company have been highly critical about the government about the data privacy. I mean, China, right? I mean, there isn't much data privacy in many areas, and that's why I think the government knows that they need to strengthen it. And the other thing is that if you look at the data privacy law and data security law, which I actually had an episode with one of a lawyer friend of mine in Shanghai 2 weeks ago, and it just tells you about what does that mean, the data privacy law. And in reality, the data privacy law is actually very close to GDPR. It's where they actually copy it and then they modify it and then make it.
I'm sure make it better.
yeah. Well, I don't know whether it's better or not, but it's definitely make it more with the Chinese characteristic, as I say, right? So I think they do take it very seriously, because for the nation to actually move forward, you need to have the data privacy law. You need to secure this data. You cannot have people just passing around personal data without control, and especially from government perspective, they always want to control these things, right? So I think that's probably the trend, for a company. But by the way, this two paper is actually still on draft, even though it's probably most likely it's going to come through. But they did open up for 1 month public consultation, and it was closed late last year. So I would perceive, it's probably within the next year or so it's going to come out. Okay. All right, the next one, very quickly, the fintech market growth. I think just a first snapshot on this. In 2018, there was a record, and if you look at it, right, the APAC actually constitute the majority of the investment from fintech, and then if you look at it from within APAC, 14 billion Series C funding and financial. And for that particular year, that record year, China, the total China deal investment is actually surpassed the entire world in 2017. So that number is just huge. However, back to 2019, the numbers dropped, and I think there was a substantial rebound in US and UK fintech investment, and then China's growth, on the other hand, have declined. And so I don't have the latest in 2021 yet, but the thing is that there's a growing trend for China investment, either domestically or from overseas funding.
Yeah.
Okay. And then the right side is actually just tells you in terms of number of unicorns in the world, US is by far has the most, and second is China, and then UK. Okay, a snapshot on the success factors. I think, just based on my own observations and the markets as well, the government's laissez-faire approach, I think, definitely helps the technology sector to grow. And what I mean is, even the laissez-faire approach, but doesn't mean they just don't do anything. They have been monitored very, very closely. Even when you talk to a regulator, they know what's going on. Cloud computing, blockchain, they know. They are specialists in this area. Of course, they are not the industry player, but they know what's going on. And but they have been watching on the sideline, and then they step in when it's needed. And the second part is the funding gap. That's a hard demand. If you look at the funding gap, right, in China, back in 2018, I think there are like 220 million individuals that are unbanked, right? That's a huge number. And then as for the SMEs, over 70% or 75% of the SMEs in China do not borrow money from banks, right? So it could be from personal lending or elsewhere, or even loan sharks. And then the third part is the success factor, probably the innovation of practicality. Like I said earlier, the QR code wasn't invented by Chinese. Online payment did not invent by China, but they somehow adapted and then move it along and then make it useful for China and solve the hard problem. It doesn't need to be very fancy. For as long as it works, then then it will be a solution for the industry. And one thing that's worth mentioning is in China is that the trust of technology application is is very high in China. There was a survey, I think, back in 2017. In terms of the acceptance of technology and internet application and even payment application, China is among the top 3 countries that have this acceptance of trust. And that goes along with India and I believe is Kenya. So these 3 countries actually highly acceptable using payment, for example, through online application. And another point is the leapfrog and SIP stages. I mean, you don't need to go, install fixed line anymore, right? Even 30 years ago, the infrastructure is not there, and ATM is not there. So all of this actually, China skipped that entirely, right? And I think in terms of ATM per capita in China, is the ratio between US and China, I think it's 4:1. So there are 4 times more ATMs per capita in US than in China. And as for branches, I think it's 3:1 or something like that. So, and then the last part, which is the most important part, is the largest talent pool for software engineering in the world. China has that in terms of the graduates, in terms of the Chinese returnees, educated outside or worked outside and return to China, and plus overseas Chinese like myself, moving to China, live here, work here. So there are a large pool of talent that actually, in China today. Now, moving on to payment, mobile payment, and this, by the way, this slide does not include the mobile banking part of it. That means through the banks. This is just the online, third-party online payment. So either through internet or through the phones. So this just tells you the story and the projection. I think it's about right even back a couple of years ago in 2020, it's already reached $51 trillion in terms of the mobile payment transaction in China. And it is the largest in the world, after all. And the 47% of mobile users actually use the digital wallets. I think Alexander asked earlier. And the mobile payment penetration rate is 77% in China, compared to US, I think it's 48 or something like that. Okay. And this just tells you the what they do with the mobile payment, right? So they categorize in 4 buckets. And the first one is personal application, the credit card payment, bank transfer, etc. That's the bulk of the payment. And then the mobile finance is the if they buy money market funds, or if they want to borrow money or lend or invest, through P2P, in the past, then this is the classified as the mobile finance. And then the consumption, of course, games, car hailing, I think is on the rise as well. QR code scan, I think this is the micro dollar amount sort of payment, and that's so this just tells you the this overall trend. And definitely the mobile payment has actually already surpassed the internet payment, through the PC and laptop, and it's going to, I believe the number is like mobile payments going to reach like 58% by 2022 or something, and currently it's like 35%. Now,
just to come back, perhaps I'm sorry to come back about this mobile payment transaction. Here, in terms of the of age of the users, do we see a discrepancy between the younger generation and an elderly generation, or you will have no issue in terms of age into the adoption of those mobile transaction systems?
Adoption, definitely the what they call the millennials, right? The millennials and Gen X, XYZ, right? Basically, as a high penetration rate, and this the highest in China, because at the end of the day, I mean, they are the easy adapter, and they have no problem using it. And the second category are the what's it called, the below baby boomers, so to speak. And then I think and then the last one is the OG generation. I think it's quite similar to the West. This 3 categories of people using that the mobile payment, right? And in here so this tells you, right, the market share. But of course, out of the 200 plus mobile third-party online payment companies, and this just tells you a snapshot, because there's a lot more they cannot see in this map. But what I like to highlight is that the parent company, or the origin of the company. Alipay and Tencent dominate the market, of course. But if you look at, let's say, 99bill.com, it's actually owned by Wanda, which is a property conglomerate. And they have shopping malls, amusement parks, and all this, right? So what they focus on, instead of going head-to-head, competing with Alipay and Tencent, which is they capture the majority market share in the retail payment, right? And the retail sector, the B2C, right? To C segment. They focus on B2B. So they focus on the commercial companies' payment between other, let's say, exporters or importers. And they use the 99bill to facilitate that. And then the other one is the Hebao. This one is actually owned by China Mobile. So China Mobile, of course, is the one of the largest 4 carrier in China, and they use their own network to facilitate payment. So they have their own app you can download. You can also pay your bills using that Hebao instead of the Alipay. And they also have linked with, let's say, the local, China is a big country, right? So they could go to Jiangsu or other provinces and then have a link with the local government. And then for some of the local utility payment, for example, they would have that app to facilitate instead of using other app. So that's why there's a lot, each company have their own strategy to capture that market. But if you look at it, right, you're talking about 30 billion worth of market share, the total amount here. Even 1%, that's about 300 billion. I mean, that's a huge number. And that's why even that 1% market share, if you can capture, that's a lot of money already. And that's why this is depends on the individual company, and they facilitate their own sort of, or the leverage their own strength, right, through the mother company or the mother company's network to strike those deals. Okay. And here is now we're going into the fintech going overseas. And I guess what I can sum up in the why they go overseas, right? In the first place, local market saturation, of course, especially in the payment space. I'm not saying every fintech domain is actually saturated, but payment definitely is. So obviously, the what else to do is except to go outside China. Fierce competition, of course, and compressed profits. The fees are already very, very low as compared to, let's say, Southeast Asia. And then also there's one more type of company that willing to go overseas, not because of the local market saturation, because it doesn't exist. Say, for example, in here, right, I separate into payment, wealth, and technology, right, 3 category. And let's say go into wealth, right? Weibo is a company that probably a lot of people haven't heard of. It is an internet company set up in China, specific to do securities trading. That means they buy, you can buy and sell stocks and bonds and so forth, not in China, but outside China. That's in Hong Kong, US, and UK. They cover 3 markets now. And I think Singapore maybe, if I'm not mistaken. So what they did is that they just don't bother to get a license in China in first place. They just set up an internet company because they know a lot of Chinese investors want to invest overseas, but they're not allowed to because there's a currency control in China, right? And you cannot just invest overseas. You cannot trade stocks from US stocks from China through legal channel. So that's why the Weibo actually come up with this plan to have this stockbroker and technology to allow the Chinese investor to invest through their channel to invest overseas, right? You can say it's kind of gray area, but nevertheless, there's some companies actually did this and service this segment of customers in China, right? And that's why in here, majority of the fintech that went overseas is actually cover payment, because there's a huge payment gap. I would say there's a market gap in Southeast Asia today, and that's why a lot of them actually goes to Southeast Asia. So if you look at all this, most of this, even including BATJ, right? They actually goes to the Southeast Asia market. So if I go, flip to the next page. Now, let's talk about the BATJ first, right? BATJ is actually these 4 giants, technology giants, cover this footprint overseas, but it's not complete. It's actually, I actually double check, and it's actually, it's not quite complete. This picture, I think it's, they have not covered the entire globe, but they just focus on Southeast Asia. But at least I think if you look at all this, right, each of the, this internet giant already have their footprint in different markets, including India and Southeast Asia. In particular, I think Ant Financial actually invest heavily into in India, but of course, owing to the recent geopolitical tension, I think that could force Ant Financial to go, may potentially even exit India market and just focus on other markets. Let's say go back to Southeast Asia to cover that instead.
And we have just a good question from one of our listener today is asking about all those applications, like Ant Financials and Tencent. How is the adoption of those technologies? Do we have already some examples of success or maybe failures in Africa, in Southeast Asia? How those technologies have been adopted? If we say, for example, in Europe, everyone is talking about Apple Pay. When we have to reference to a payments system. So, and how is it working? I mean, do we have some examples now already?
Yeah, I think, well, first of all, a general answer first is that it is still early stage because they only enter like a few years, and some of the smaller players, some of the bigger players, and they did strike some deals in Alipay, for example. In many countries, they already have the Alipay version of, let's say, Indonesia and Hong Kong. They restarted first, and then they spring into like Singapore and Indonesia, all other locations. So they already have the mini version of the Alipay in other countries, but they are not big. Big office reason they just started, and also the adaptability is still not there yet, and not just because of regulation, but also because of the way they market. I think it's tougher than what they expected, as I heard from someone say. Because it's a different market. It's not China, and it's not Hong Kong. So I think they have enjoyed some small success. So they have already set up the let's say the Alipay channel in other countries, but it's not big. It's far from big, and that's why the way I see it is that it's still at the very preliminary stage when they go overseas. And except companies like I said earlier, like Weibo and all this, right? They already captured the major market share in their even rival, like Robinhood, right? And sorry, I shouldn't say rival, Robinhood. They actually, they want to become a Robinhood in the West as well. But for as for payment and others, because it does. It is a sensitive area, that especially with the geopolitical climate now, even when they want to expand, I think it will be slower than expected, and that's how I see it at the moment. And but what I would like to do is probably go back a little bit here, because I have some examples. Like if I just look at all the smaller players in here on the left, right? Ping Pong is actually an Air Wallets, right? They are the cross-border payment company. They are just like Alipay, right? Between China and outside world. And then as for IP Links, this one, right? IP Links is actually cover the Southeast Asia and US as well, cross-border payment. And whereas the Air Wallets and Ping Pong is actually just focused on Southeast Asia. So each of them pick the different geography as well. And then in the WeCash, where's WeCash? Yeah, WeCash on the website. So they are the intelligent decision-making, well, they're an AI company really. And then they use the technology to help the investment company via the intelligent decision-making client acquisition engine through the big data and AI to capture the customers, from through the social media, etc. So they have the product, and again, they're just entering the different countries, and I believe this one is in Indonesia. And but again, I think it's early stage, and I haven't seen any big numbers that come out yet, and everyone claimed that they have to capture the market, but I haven't seen much happening. And then for others, right, some of them actually focus on the lending side of it. So it means it's secure and uncollateralized lending platform. For example, Rupiah Plus. This is 100% focused on Indonesia. It's a Chinese company set up in Indonesia to focus on lending, right? So focus on lending, and not. I don't think it's a P2P. It's actually just a lending platform, and that's why all these individuals are just started to go into the market. And at the moment, I haven't seen big success. I think they're just starting the entry, but I think it'll take a while before you.
It takes time.
Exactly.
The reality.
Exactly.
Of the market, you don't. You have to take time, obviously, when you start expanding internationally. And I mean, we are running out of time soon, so sure. We have a question from one of our participants today asking about wealth management evolution in those fintech. How do you see those wealth tech? You mentioned robo-advisor, which is perhaps I would say self-directed investments, but I know that in China, wealth management products, the equivalent of our structured product in Europe, were very, very hype 10 years ago, 5 years ago. Where are we in terms of, I would say, not the mass affluent or the inclusion, but mostly, I would say, the high net worth or the ultra high net worth.
Right. I think the robo-advisors, I think, it's not new. I mean, even for China, they've launched it like for the last couple of years already. And even not just fintech, some of the banks, let's say China Merchant Bank already launched. And I guess that one of the big difference between the other countries and China is that most of the robo-advisors that I know, there's no fee. There's actually no fee. You don't have to pay for it. It's just one of the service that they provide to the customers. And I would say, I would dare say that, the high net worth definitely will not touch it. And because it's still not mature enough for people to just say, I've got to have $1 million and I just rely on the robot to help me to invest. A lot of them still go through the traditional channel. That's why UBS are doing very well in China, and other companies, they target the ultra high net worth, and just to capture that market and say, if they have private advisors, wealth advisors to help you to invest in China or overseas. And I think the robo-advisors, I don't think is taking off as much as we hope it has. And that's why I think, it's still, from that area, I haven't seen much sort of really big success stories on robo advisors, having captured a large audience of, because, and don't forget, and again, this is, don't quote me on that, but I guess, from my personal experiences, as Chinese, usually they want to invest themselves. They don't usually rely on advisor. They usually want to trade stock themselves. They don't want to rely on one guy or a bot to help you invest. So that's why this could be one of the reasons why it really has not taken off as the industry sort of expected.
Sure. Well, it's going to be difficult for all investors from all big firms to actually go robo-advisor. But obviously, from the Convoy or the Noah and equivalents, they are still looking into this type of solutions and looking to a better way to engage with a new generation of investors anyhow.
Right. And one last point I want to make is that there's a lot of private funds company in China, not public funds, private funds. And those are, set up by just a few people, and they only invest for a handful of people. And it could be the actual shareholder themselves. And that's why those especially are very, very manual. It's actually operated by people, not bots. And that's why in that sense, I don't think it's actually relinquished they have not harnessed the power of technology yet in this space. Okay. All right. So if I know time's running out, so I'll probably skip this. Just very quickly, just 1 minute on this. The business model that they try to go overseas is that usually they either establish the footprint, set up their own company, or they acquire stakes from local company or enter partnership or enter JV into, that's what you see in the different footprint in here. Like Credit Ease, for example, they set up their own company in Singapore, and Financial actually invest in PayTM India, and Fintech actually set up a JV with UB Singapore, right? And then in terms of the execution model, they either export the products from China, homegrown product, or they migrate the Chinese model, the way they operate, let's say a P2P platform, they entirely, they move it to overseas, or they just export the technology, meaning they could have a AI engine or underwriting engine. They would put it in Southeast Asia and then sell it to some of the lending companies, for example. Okay. Now, P2P boom to bust, I think this is a quick snapshot of what happens, from 2006, the birth of it, until all the way to 2021. So all this you can see is actually all this different company are also set up. And then 2013, there was about 800 operators, and with the market size of $15 billion. And then it grew to the peak of 2018, 6,000 plus company operating with about $1.1 trillion, which is far bigger than consumer finance, any other sort of small lending business domain. And then around 2018, as you know, the China regulator called for a stop, and they wanted to convert all of this P2P and into online lending. That means you got to bet on your own money, not on other retail individuals. And they don't allow the P2P anymore in China. And as of today, I think there's supposed to be all the P2P is supposed to be gone, but as I understand, there's still some P2P have not wind down yet, and they still need to pay back the debt, or they need to clear the license or whatever. And I think it's going to take the next couple of years to clean up. But at least there are 262 online lenders already sort of sign up and also raise the necessary capital. And I guess the question is that whether or not people should go into this, right? Online lending. And I guess how I sum up is that it's a higher entry barrier than before, because when you set up P2P years before, I was in the P2P business as well, and it was a very, very low capital that we need to raise. But now we're talking about $16 to $154 million, and that's still a lot of money. Oh. And that, right. And the $16 million, I think, is provision level. So only you can operate in one province, and 154 million, I think, is for national level. It's the entire China. So that's the difference. And then there's a high entry barrier, and also there are quite many players available already. So is this the right market to go in? And and that's why for foreign companies to actually come in China, there's still a lot of options. First you got to look at, are you the producer or you the consumer? Are you actually setting up a company to run the business and actually sell this service to the general public, or are you going to set up a company just to leverage the technology? I think that's a very different dimension, and that you can choose. And whether you raise it through the incubator or the VC, and then I personally think that for a lot of the foreign companies, they should really look at the strategic partnership, and because coming alone is not easy. And even though in here, you got PayPal actually got the license already they bought one local payment company, and then MasterCard got the clearance license and all this. This is a really big company, right? And not all of them could be successful on day one. And that's why strategic partnership could be one way out. And the other thing is that you don't necessarily need to get the license as online lending. There are others like online consumer finance, and as one. And then digital banks, UBS is already trying to apply a license when they're ready, and there are success stories in China for foreign companies enter China. Home Credit, for example, they are now the largest. They are a Czech Republic company, but they are the largest consumer finance company today in China, and they have like 300,000 people operating in China. And then there's smaller players like Adian. I think they are it's a payment gateway company, if my memory is correct, and they actually work with the local partner in China and then help them to build a bridge for cross-border payment. So that's another model. And then Dianrong is actually set up by, it was a P2P company set up by a co-founder of the Lending Club. And he actually came in 2012 and set up his own company in China. So there are good stories, to tell as well. That, and they make money, after years of investment here. But the thing is, you got to really think about yourself as a pure tech player, or are you really going to operate in China as a service company, providing loans to the company, etc. And that could be quite different. And but there are choices, there are options available. And by the way, this is actually some details if you want to go into have a look about regarding the small loan business regulation. So this is all here in this link.
Okay, we'll share all those links obviously with all the participants if you want to.
Yeah. Okay, so the last slide is actually what I think the success of the fintech so far in China is that is the contingent investment fintech is actually local FDI is all coming in. FDI, I think, is a record high last year. At the height, it's actually surpassed even US, right? I'm talking about foreign direct investment overall in China, not just in fintech space, right? And then the government supported R&D spending is on the rise. They are even injecting more fund into that. And that is going to help the industry. And it's already have a sizable fintech marketplace in China today. So obviously that's an advantage. And the market is only going to be more open because there's no way you can reverse that. And they all know that is the way to go to globalize or internationalize, you have to open up the market. And that's why that's another way, one of the advantages. And then the talent pool for the market, local and overseas, they are actually, I know a lot of people actually, even foreigners working in China. Some speak Mandarin, some don't. And that's why and it's also attractive for people to actually work in China. So that's a good sign. And then the graduate pipeline, 8 million grads a year, is the largest in the world. And like I said, you don't have, everyone is not Yao Ming, if you apply the basketball terms, right? But if you have so many people, the scale, the sheer size of the talent in China, you can pick some of the best players in China today. And I've hired more than 1,000 people in China. And it never ceases to amaze me that, you can really find a really good players and really good talent, from the market, alone. And the last page is really the future. What I see is that the model is changing. A lot of the company, switching from to C to B, because this 2Cs could be saturated. Now they go on to providing business solutions instead, like in the payment sector. And business model change, meaning because of regulation change, a lot of some of the companies will switch from fintech to pure tech, or they want to step back and actually provide a solution rather than being part of the player. And the banking transformation, don't underestimate the banks in China. They are heavily funded. and they have a lot of talents. And now they're setting up fintech spin-offs, and that is going to change the landscape in China in years to come. And the financing deepening, meaning there's a lot of still funding gap in China. Like I said earlier, the SME individuals, and the China also try to help those farmers or the agricultural space to get funded, and those are really underfunded big time, and that's why that's another area to go into. And then the market consolidation is going to happen, and the same as the internationalization, as I mentioned earlier. And so I guess this is probably sum up my presentation. But before I close, I just one thing I want to quote is the what Apple's Tim Cook has mentioned earlier. I think it's 3 weeks ago when I came across an article. Is basically what Tim said is that the main reason for them to continue to invest in China is because of the people. And a lot of people actually underestimate that there are 2 million software developers only work on iOS ecosystem, and that alone is enough for them to stay in China. So that wraps up my presentation. Thank you.
Thank you very much, Greg. It was absolutely fascinating, and we can't wait to look in details into each company you presented today. I think it's absolutely an amazing source of information. If you don't mind, we might take one or two questions. The first question, obviously, is about the digital yuan. What is your view of the digital yuan? And what is the future of this new currency? Obviously, because this currency, we are talking about this currency for Chinese people, but I can imagine that any companies, Western companies, Swiss companies operating in China will have also sooner than later organize themselves with these digital currencies. What's going on there?
I think DCEP, you're talking about the digital currency for the central government, and that I think it has been piloting for a while, and I think the main reason for the government is actually twofold, right? To launch this digital yuan. The first thing is internationalization. That means the yuan has to go overseas, but having said that, that has to go along with the renminbi internationalization, because obviously renminbi cannot outmatch US dollar or British pound and other major currency yet anyway. And I think this is the first step for them to go outside, because they want more yuan circulation outside China, not just in China, right? And among, of course, there are many other reasons for them, as they say, they don't want to create these coins anymore because they're costing them a lot of money and all this. But strategically, it's definitely internationalization is the major goal. And the second part, of course, from a country perspective, obviously, is eventually they want the yuan to become the major currency in the world, right? So that's why the first step is internationalize, and the second step is that to push this yuan further out so that everyone will use it. And that's why it's a very long game. That's my perspective. It's a very long game, because it ties with a lot of things in China. The policy, for example, we still have the currency control. That's not going to go away soon, and all this is already one big bottleneck for us. And that's why I think this is something that it's a long game for the government. But what they said is that they're not going to squeeze out Alipay and WePay. They already announced that we're not, that's not the purpose. The purpose is really to go outside China, and of course for the players, how to take advantage of it, right? Honestly, I really don't know, but what I can see more immediate is that similar to Alipay, similar to WeChat Pay, right? If the yuan is going to operate outside, let's say in Australia, you need those payment operators to accept that yuan. You need those devices. You need the POS machine. You need those scanners. You need all this thing is a whole set of equipment, because an Alipay scanner is different from WeChat Pay and all this, right? So sure. That alone will be, there's a market for that, and you have to get that out, and so that the people can accept it, and then eventually, but ultimately it's up to the general public to accept this yuan, because even for China, if the government launch it, right, if you ask 100 people in China today, yeah, they're going to use the yuan, for fun, but they would prefer to use Alipay because it ties with the ecosystem, the super app, and all these other things, right? Yuan, on the other hand, there are certain advantages of it, but it's not, it's not compatible, or you can really compete with Alipay and others. And that's why I personally feel that it's a really long game for China to roll out the digital yuan, and it's not going to materialize for a long, long time.
So we won't be paying with digital yuan in Geneva or in Zurich before 10 years, right?
Probably in our grandson's time. I don't know.
Okay, we'll see. Well, thank you very much, Greg, for your time. Thank you very much for those insights of the Chinese fintech, and definitely we have a lot to learn now with all the presentation you share with us. Thank you very much to all the participants today following this Swiss Chinese Chamber of Commerce conference. Thank you again. You as a member of the chamber will receive a newsletter with the upcoming calls. Perhaps, Philippe, you can remind us what are we expecting in the following month in terms of conference?
Yes, so well, first, next week we're going to have the Chinese bank series to start with ICBC and CCB, who will present their services and also their point of view on the actual financial context between Switzerland/Europe and China. So don't miss this opportunity to meet also with these Chinese banks. We're going to have some more Chinese banks to speak later in the beginning of May. And also we are covering the AI and drones topic by the end of May. And then we also have some F&B events in the pipeline. So keep posted. You will see all these invitations. And well, you give me the opportunity to close this webinar today. Thank you again, Greg and Alexander, for your participation, and thank you all, of course, to all our members who took part to this webinar. And we hope to see you soon, face to face, hopefully. This is just a question of time.
Thank you.
Thank you
very much.
Bye-bye.
Bye-bye.
Bye.